We start off with the markets. The Dow sinking 220 points today, closing near the lows of the session after Trump slapped fresh tariffs or threatened to slap fresh tariffs on China. But today, the trade war got a little more personal. In fact, you could say it hit home, taking stocks right in your living room to the woodshed. We're talking names like Restoration Hardware, Wayfair, Williams-Sonoma, Tapestry, Estee Lauder, all getting crushed on expectations that their products will cost more soon. So, did the trade war just get real for the U.S. consumer? What could it mean for the markets? Guy, welcome back.
Thank you. Did it get real? Yeah, I was in Wyoming for a week. Nobody seems to care about tariffs in Wyoming. They can't spell it either, so I was at home in Wyoming. But I think the broader market is where you need to look. And before I left, we talked about it. The market was testing its lows on the back of trade fears. And one of the things we said was into 4th of July week, it'll be a holiday week, the market's going to go higher because this administration views the market as a report card. That's effectively what happened. But now I think we're at the top end of the range, 2,800 in the S&P. I think the market probably drifts back down and tests that 2,700 level, which makes sense. But the stocks you want to look at, Restoration Hardware, which has been a monster. Tim talked about that 2 years ago when the stock was probably trading 50. Look at it now. Valuation is reasonable, tremendous EPS growth. The problem is, and the reason why it's been lower, 75% of their merchandise comes from China. I think it's all a smokescreen. I think you get a chance to buy it cheaper, but if it trades 115, you buy it with both hands.
So, first of all, Theater of Pain, Motley Crue, 85, great album. We have to acknowledge that, even on a
I had no idea.
Yeah. Thank you. I mean, I was there.
Thanks for the clarification. I feel better for it.
So, here's, last night we talked about, and the only reason to bring up last night's show is we were on the edge of maybe seeing the S&P breakout. This news came out right at showtime. And I have to tell you, I thought the market was going to actually, before that news, be in a position to break out. We don't need to get into the reasons why. But what's different about this and why I have to feel more cautious now, this new list of $200 billion wasn't a new investigation. This was a supplement to an existing Section 301 investigation. What does that mean? Instead of having another 360 days from which to negotiate to an end, this now fast forwards that track, and it really looks like this administration is serious about attaching this to a decision by August 23rd or 24th. This is very real. If they were just jawboning, they would not have necessarily made it as a supplementary action.
It was already out there. Whether it was brought forth, Tim's point is accurate.
Another $200 billion was really out there because we
it was
said,
always out there. It was 34, it was 16, and it was 200. But the time period and the timeline, to Tim's point, has changed. So I think that's the thing that the market has to add into the calculus. But I would see this as a victory. Why? Because the market tapped for the bulls, because the market was ticking. Well, first of all, that number is 2792 that we have to take out, not 2800. We closed yesterday 2793, indecisive in the marketplace. You get into the thick of earnings, this market's not going down, it's going up.
Well, I'll tell you what. I mean, is your point that 70 basis points on a day like today, it could have been a lot worse when we were at the top of the range? I'm trying to understand your point.
The 50-day moving average in the S&P is 45 handles lower, 43 handles lower in the S&P. Today to close at 2774, when we were all dramatic about how the market was breaking out, we're only 20 handles lower.
Could have been worse.
It could have been worse. The market absorbed it. This is a tape bomb. This is NATO. I think at this point, you're going to see the market get its footing again and rally higher.
I agree with Steve. I thought this 71 basis points was really a nothing when you step back and think about the rhetoric here of, are we really entering a trade war? So there's a few things. I think people don't really believe it's going to happen, or they believe that even if it happens, it's going to be pretty short and that Trump will negotiate something. That's what he likes to do, right? He likes to create havoc and chaos and then ultimately come and negotiate something that he can declare victory, hopefully something that's face-saving for China. China can declare victory as well. I think the market has a lot of hope that that's still an outcome that is likely.
Can he declare victory right now?
But
I don't know.
Well, their market's down 12%. His market's up 9%.
Is that a victory for us because we're hurt less than them?
Well, yes, that is a victory for him.
But
no, I'm not saying it's right.
I'm
not saying it's right. I'm saying to the point that Guy made at the top of the show. He considers the stock market to be his barometer of success. When he's looking at it, he's looking at their market versus ours.
Okay, but when you say, when you say declare victory, what are you saying about
pushing in the right direction?
But are you saying implementing these next 200
or pushing in the right direction?
And saying what though?
Negotiating his way, the art of the deal pushing, and he'll look at it as that we import from them $506 billion versus the $130 billion.
Here's why I would take the total opposite side. I agree with the concept you guys are talking about. I agree this administration uses the stock market as a gauge. That's what scares me. Stock market's barely, 2% off of all-time highs, and here we are. They think this is going to be fine. Guess what? The consequences of this are not going to make it fine. This is starting to have collateral damage into the supply chain. We're getting into the depths of what this truly means. And I $200 billion alone, I still also don't think is going to wreck the world. But if you start talking about a 10% tariff and there's collateral dominoes to fall from here, this is major CPI impact, major consumer pullback, major equity revaluation.
Well, that, not just the impact to the consumer in terms of the price hikes and the inflationary impact, but also if you think about China retaliating, they don't have that much to retaliate on in terms of their goods that they buy from the U.S.
Well,
so how can they retaliate?
I'll tell you
they can do other things. They can block deals. They may step off the pedal in terms of buying treasuries. They could do all sorts of things to the supply chains of U.S. companies, which could rattle the markets more than just $250 billion in goods which have tariffs on them.
And I'm glad you brought that up. And not to get political here, but the president today went after Germany. Effectively, I'm paraphrasing, but said Germany is effectively beholden to the Russians. We can agree or disagree. He said it, I didn't. But if that's true, if you just carry that forward, that means effectively we're beholden to the Chinese for all the reasons you just mentioned. So if they decide, you know what, let's do something with our U.S. Treasury position, or even worse, devalue our currency, which last we saw in August of 2015, then you have an issue. I'm not saying that's going to happen, but if you just carry it forward, that to me is really the black swan.
So how do we trade here? When we see drawdowns today in names like a Restoration Hardware, a Wayfair, what do you do?
I'll tell you what,
say, you know what, no touch.
I think the consumer is going to be more impacted than they think, and I think we were already worried about CPI. It doesn't happen overnight, though. So I think that the short-term impact is going to be, I don't know how significant it's going to be. I will say that think of the sector and consumer discretionary. Think of the run that they've been on. Think of what some of the apparel retailers. Think of a Michael Kors. Think of a Restoration Hardware. Think of a Williams-Sonoma. These stocks that went off the life support into being rightfully very interesting picks, especially with a consumer with more spending power. I don't think you need to buy those names tomorrow, even though I don't think the businesses for those companies have been wrecked overnight.
Yeah, Karen?
Yeah, I mean, I agree with that. If you look at what happened to a Michael Kors today, I mean, it was down probably $4 and change dollars at one point. It closed well higher than that. Same for Tapestry, same for some others, which to me just sort of bolsters my theory of the market saying...
Tapestry, formerly known as Coach.
Correct.
So weird.
Formerly known as Kate, also at some point.
Right.
Anyway, I think that we're looking at this microscopically. I think the picture is stepped back much bigger. We don't know the end game yet. And so to try to trade on these names in the middle of it seems very difficult. Something like a Boeing, okay, down $6, that's a little bit of a move, but I thought the run-up was pretty far, pretty fast anyway. So I'd wait, but I do think this trade thing will get resolved.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.